Thank you for joining me. I'm Alex, and I want to talk about American Eagle Outfitters, which is a fairly small company. So they make apparel. Current price is $14.39, which gives them a market cap of $2.4 billion. And as I said, fairly small company, kind of tiny compared to what I usually do. Dividend yield is 3.74% with a payout ratio of 36%, which is pretty decent actually. Revenue $4 billion, earnings $262 million, which is up significantly, both of them. So the earnings were going down slightly over the past 3 years, and then the plus 30% year over year last year. Pretty good turnaround there, and I think that that's why the PE is only 9. The market kind of lags behind significant changes. Obviously, most in the market want to see if they can continue that or if it's going to go back down, but I would say that this is a really good sign. Total assets $1.9 billion, total liability $616 million, which gives them total stockholders equity of $1.3 billion, and that also gives them pretty amazing balance sheet. So obviously total stockholders equity being over 50% of the market cap is pretty amazing. Assets to liabilities ratio is also pretty amazing. So overall, I would say that for dividend investors, the dividend is pretty good. The payout ratio is pretty good. Now, they don't raise their dividend very frequently. They raised it in 2018, and before that, they raised it in 2013, I think. So I wouldn't count on that increasing significantly every year as most other companies do. But the payout ratio obviously leaves them with a lot of room for growth there. And a dividend yield of just under 4% is pretty amazing by itself. So pretty good dividend, pretty good payout ratio. The PE is pretty amazing. The balance sheet is pretty amazing. And so overall, I think that for a dividend investor, this looks like a very strong company right now. And as always, do your own research. But good dividend, good payout ratio, good PE, good balance sheet, which also makes good sense for a value investor. The thing that's slightly worrying is that the PE is actually increasing, forward PE of 10 instead of 9. It's slightly less of a shift because it goes from 9.4-ish to 9.8-ish, but still not really that much of a problem in my opinion. Obviously a PE of 10 is still amazing. And obviously, a PE of 10 still allows them to even grow their dividends if they wanted to. So for a value investor or a dividend investor, I think this is a very strong company right now. For a growth investor, I think that the revenue growth is slightly too low. So I wouldn't really count on significant growth there. So growth investors will probably find better companies elsewhere. But for the other two, I think this is a pretty strong buy right now. And so that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.